Hi, I'm Samantha Brinkley with Rocket City HR Consulting. Today we're going to talk about how to tell independent contractors apart from W-2 employees. What's the big deal and how do you tell the difference between these two entities? As an HR consultant, we get asked a lot about using independent contractors. This topic has been in the headlines frequently over the last few years, especially with Uber, Lyft, and a lot of other gig businesses regularly using independent contractors instead of employees. We also come into contact with businesses of all sizes, but especially those that are startups that want to use independent contractors instead of employees. So what's the big deal? Well, for government entities like the IRS and state and municipal tax offices, this is big tax dollars that they're missing out on that they would be receiving in payroll taxes for an independent contractor that should be an employee. The Department of Labor has other issues. They want to protect worker rights, specifically regarding pay and overtime issues. For them, it's a matter of fairness. So how can we tell when it's okay to use a 1099 or independent contractor instead of a W-2 employee? Today, I'll walk you through some key distinctions and considerations and hopefully clear up the confusion. Each agency has its own guidelines, but there is a lot of overlap with these. The IRS looks at three main categories: behavioral, financial, and the type of relationship. Common factors for all of these regulatory agencies include these key items. The first factor to look at is the extent to which the services rendered are an integral part of the principal's business. For example, a shoe salesman in a shoe store is an employee, not an independent contractor. A plumber working for that shoe store would likely be an independent contractor. In another example, a roofing company may use 1099's as another business to install gutters. However, if that same roofing company offers gutter installation as a regular service, those workers would be classified as W-2 employees. The second factor is the permanency of the relationship. Most independent contractor relationships are short-term, and the work is required for one or multiple projects, and that work is different from the organization's key business. A good example of this is a business that needs a new website. They can use a 1099 independent contractor to perform those services. Once the project is done, the 1099 will submit an invoice, and the business will pay for services rendered. At that point, the relationship with the independent contractor is over. On the flip side, let's look at an organization that uses a computer programmer to support a software product that the business is marketing to others. This work is an integral part of the organization's business, and the worker is needed either indefinitely or for a long period of time. In this case, the worker should be classified and paid as a W-2 employee. The third factor that is looked at is, are their employees on staff performing the same kind of work? Let's say you have an engineering firm, an employee retires. They want to come back and work part-time. If they are performing basically the same kind of work under the same conditions, they should be classified as a part-time W-2 employee instead of a 1099. Factor number 4, independent contractors provide their own facilities and equipment. Employees don't. If you are using 1099s, be careful to not routinely provide them office space and the tools to perform their work. The fifth factor is the nature and degree of control by the principal. Contractors work off of an agreement towards an end product. Any deadlines or quality controls are clearly outlined in a statement of work. They are free to perform the work in the manner they see fit on their own schedule as long as they conform to agreed upon delivery dates. Employees, on the other hand, regularly attend company meetings and receive some level of ongoing supervision or oversight. They may have set work hours and receive specific instructions and guidelines on how to perform their work. Numbers 6 and 7 are closely related. The worker has opportunities for profit and loss. And number 7 says the amount of initiative, judgment, and foresight in an open market competition with others is required for the success of an independent contractor. So independent contractors should be running a separate business, and they will have opportunities to make profit and loss from that business. They have the ability to take on additional clients, to compete with other businesses, and to set their own prices. On the other hand, employees are generally limited. They can only work for 1 or 2 employers, and they're not able to take on additional clients beyond that. The 8th factor is the degree of independent business organization and operation. An independent contractor may have other employees or are a separate business entity. They may have their own management and may file their own taxes as a company. A W-2 employee relies on the business as its sole source of income and defers to the company's management team. We do understand that not all cases are this cut and dry. If you have questions on worker status, you may file a Form SS-8 with the IRS, consult with an HR advisor, or check with an employment attorney. Failure to classify your workers correctly can be very costly in fines and penalties. If you get audited by a local agency, the state, the IRS, or the Department of Labor, you can be responsible for back pay, taxes, and all kinds of things. So you want to make sure that you do this correctly. We had a client that was audited by the city, and the same day they made sure they paid back taxes for 1099's that should have been W-2s. And then if you think about it, if they had to redo their local or their state taxes, guess what? They had to go back in and redo their federal taxes at the same time. So something you don't want to get into. You'd rather be proactive and make sure that you have your workers classified correctly from the beginning. If you have a worker that is likely an independent contractor, make sure that you do these things to protect that status. Verify that the entity is set up as an LLC and that they have an EIN. Have a signed independent contractor agreement, not an offer of employment letter, in place. Create a separate 1099 file that includes a copy of their business license, their insurance, consulting agreement, and any statements of work. Make sure that they are not receiving employee benefits and that they have not signed an employee handbook. Pay them only after receipt of an invoice. And be sure to provide a 1099 form if you've spent more than $600 in their services in a year. We hope this has been a helpful overview of the difference between 1099 independent contractors and W-2 employees. We are always here to help if you find yourself caught up in a complex situation. You can find us and learn more at rocketcityhr.com.